Hello, my name is Jim Sapp. I have been studying and working with ERC Tax now for over 6 months. During that time, I've gained a wealth of knowledge. I've gone through extensive training and am now a certified ERC specialist. Here's my biggest fear for potential ERC clients and ERC agents. Whenever there's this much money involved, it's going to attract bad actors, those that just want prey on unsuspecting businesses and take advantage of them. In some cases, it's unintended ignorance that effectively cheats business clients out of tens of thousands, even hundreds of thousands of dollars, simply because the agent and the client are unaware of what is possible. What do I mean? Well, for example, there are non-CPA, mostly just marketing firms being paid, using paid preparers that go for the low-hanging fruit, or what I call the relatively easy ERC filings. The problem for the client here is that they only qualify the easy to qualify quarters, leaving a lot of money on the table the client could have had. For example, let's take a client with 30 employees, and one of these non-CPA paid preparer outfits says to the client, "Congratulations, you're going to get back $7,000 per employee or $210,000. Which sounds like a lot of money because it is. The client at this point is quite excited. However, what the client doesn't realize is they are being taken advantage of. Based on the average amount per employee, the same client with 30 employees could have potentially been looking at over $600,000 with Jorns and Associates CPAs. The solution for the client is several-fold. First, it is to find out the experience and pedigree of the firm doing the filing. There are questions you need to ask them, like, what do you tend to average per employee when you file? If they try to avoid the question by saying every client is different, it depends upon the business, well, this is at least partially true. But if they don't give you a straight answer, go elsewhere. Who is actually doing the work? Paid preparers? Is the work farmed out or done totally in-house? Is a CPA signing off on the filing? If not, once again, I would go elsewhere. Another question to ask is, what kind of justification report do you prepare for the client to justify the ERC filing amount? The IRS is just starting to audit ERC filings, starting, as you might have guessed, with the filings of these paid preparers, and it's adequate justification reports are not there, very likely the IRS will want a repayment of all or part of the ERC credit the business received. This could put the client in a real bind with most likely very little help from the people that filed for them. It could potentially cause the client's business to go bankrupt. Let's say, for example, they are audited a couple of years down the road and the IRS denies the filing. At this point, let's say the client paid $30,000 or $40,000 or more to the outfit doing their filing. Well, guess what? The IRS could want all their money back, including the money paid to the outfit doing the filing. Good luck getting that money back. This just means that the client would have to come up with $30,000 or $40,000 on their own they didn't really receive because they paid to the outfit doing the filing. In this case, a couple years later, that outfit that did the filing could be out of business, nowhere to be found. With a reputable firm like Jorns and Associates, CPAs, it's highly unlikely this situation would occur with them because the level of documentation and justification they provide is the best in the industry, often in the hundreds of pages of justification. But if this would occur, Jorns would refund whatever portion of their services the client was being denied by the IRS. For example, if it's $100,000 that they denied, okay, they paid Jorns 20%, so that'd be $20,000. Well, if it was $100,000 of the total that they wanted back from the potential client, well, Jorns would refund them that $20,000 that they paid them. If the client decides to file with Jorns and Associates, they can rest easy knowing their filing is going to be prepared right with the maximum possible credit due them, with complete audit protection for 5 years. which pretty much assures them what they get back, they're going to get to keep. One other thing, don't be fooled by one of these outfits that say we're only charging a 15% contingency fee for the work. Jorns Associates CPAs charges 20%. Jorns almost always gets at least 20% more money back for the client. So it's not how much money you pay, it's how much you get back. Thank you very much. Check out the description. Come check us out. And we're happy to work for you and get this done for you. Thank you very much.